All right, everybody. Stocks by the numbers. Welcome back. It's Monday. Market just closed. We just hit fresh highs. Everyone's pumped about what's going on this week. So let's get into what we're talking about. I'm looking at Advanced Micro Devices, ticker symbol AMD, listed here on the Nasdaq. Stock just closed $177.83, up a little over half a point, roughly a third of a percent here on the day. We can see slightly red here after hours, but we hit a high today, roughly a dollar higher than where we are right now, and 52-week high was hit roughly 7 points higher than where we are. So what is really going to take place here with this company as earnings are coming out again tomorrow after the close? EPS estimates 77.4 cents per share. Revenue estimates 6.126 billion for the quarter. Now, it is a jump up in revenue expectations. Looking at the last several quarters, that came in roughly 5 billion and change. However, I believe they came out there was, I think, one quarter where they posted about roughly 6.5 billion, and we can take a look at it. But it looks like, in my opinion, if they come in line with this revenue estimate, they may actually come in slightly shy of the estimates for the year of 2023, because this is Q4 of 2023. So now we're going to see if they beat the EPS and revenue estimates expected for the year of 2023. And on the EPS side, it might look decent. On the revenue side, I have a feeling it's going to be close. And if we look at some of these numbers here, we could potentially make the case that it's overvalued. But of course, I can appreciate the fact that, it's a brand name tech company. It's been growing consistently over the years. Everyone's pumped about tech and AI. So everyone's just basically assuming that AMD is just going to keep growing like a weed. And if you look at the estimates, you can see it actually expected to take a pause this year. So I'm not saying that now this year moving forward right into 2024, I'm not saying that it can't breathe for a second and then potentially take another leg higher. I know a lot of analysts out there are putting out price target estimates around 200, 210. That looks like the second level of resistance on the weekly when we look at it. We'll take a look at that in a second on stock charts. But right here, let's look at some of the numbers, right? So we have a market cap, 287.28 billion, okay? Now, again, the company revenue has been growing pretty consistently, especially over the last several years, but we are currently trading at a pretty high multiple. The price to earnings ratio, again, that is the stock price divided by the EPS. And your PE right here is sitting roughly around 1,400. So as you can see, we could definitely make the case looking at some of these metrics that this company is overvalued in the numbers. We have a beta, again, 1.61. Again, the beta, the volatility of the stock in relation to the overall volatility of the market, the lower the beta, the better. You would like to own something, in my opinion anyway, at 1 or sub 1. But we know these high growth tech stocks, we know they swing, they pop, and they drop. That's why options traders love them so much. So of course, you have to, go in expecting a little bit of volatility on AMD in the short term if you are going to play it. But as you see, looking back the last 4 quarters, the company beat on the EPS side for the last 4 straight quarters. Now EPS estimates bumped up a little bit more, right? 77 cents. So I'm curious to see, again, the highest in the last 4 quarters was 70 cents. So I'm curious to see if they can pump up that profitability per share by roughly 10% from where they were last quarter. That's what's potentially raising a little bit of a red flag for me as well. If we look at the revenue here, you can see roughly, 5.5, 5.6 billion, down to that 5.35 level, and then as of last quarter, 5.8, right? And again, this quarter, we're expecting 6.126. So, we're expecting to continue to bump up. And the profitability, as you see here, basically reinvesting completely into R&D and what could potentially take place over the next 1, 2, 4, 5 years. The company profitability has taken a hit and actually went negative for Q1 of 2023, but it has been climbing nicely for the last 2 quarters in a row, and we can see that last quarter they posted a net margin percentage north of 5%. So, definitely nothing to sneeze at. We know it's a strong company. The question is, should it go lower before it continues to go higher? Right? And if we look again annually, you can see 6.5 billion all the way back here in 2018 up to 6.7 billion, jumping almost 50% in 2020 to about 9.75 billion. And then look at this massive increase here just in the last two to 3 years. 16.4 billion, 23.6 billion. Looking at where they came from roughly 3-4 years before that, going from about 6.5 billion revenue to almost 300% higher than that at over 23.5 billion. So looking at these numbers and the way that this company has grown over the last couple of years, you would assume that for 2023, estimates would be north of 24, north of 25 billion, when in reality, they're actually sub 23 billion. And if we switch over here, we can see, right, that the company has been beating on the revenue side. Predominantly, we have beats on the 7 of the last 8 quarters. Definitely nothing to sneeze at. And if we pull out here and look annually, we can see that the company is consistently coming in above analyst expectations for the fiscal year revenue numbers. And you can see only one slight miss here, going all the way back to 2015, back in 2018. But you can see, look at the drop here. You have a slight drop in revenue expected to close out the year for 2023, right? Going from roughly estimates of 23.5 billion, now we're at like 22 and 2/3. Right? So the company looking to drop down in revenue by almost about $1 billion and change. And then you can see, look what happens in 24. Now we're jumping to almost 27 billion. And then 25, it continues up to 31.75. And then of course, 2026, apparently the company is expected to completely take off and almost double the revenue from this current point and get up to almost 39.5 billion throughout 2026. So again, all of you who, are long and bullish on AMD that are hearing me say it might just pull back here in the short term, but continue higher in the long term, I'm trying to make everyone happy here when looking at the overall analysis. But again, I am just being honest and being truthful in my opinion about what we can expect to take place. So technically, based on how the company has been pumping and running, that's why I'm saying, in my opinion, unless they really blow this quarter out of the water, which no one is expecting, chances are they're probably going to come in line or potentially slightly below this yearly estimate on the revenue side. So technically, in my opinion, it really should begin to sell off here over the next coming months. And then 2024, we can see the estimates again jumping up to almost 27 billion. So now if they begin posting the next 1 to 2 quarters, 3 to 6 months from now, from today's earnings, if we're seeing a significant increase in revenue in Q1 of 2024 and Q2 of 2024, then that's why I'm making the case that I can appreciate the fact if we, as investors, want to take it that next leg higher and get it to that 200 plus mark, right? Because we're expecting a really kick-ass 2024, and of course we're going to be moving into an even better 2025, so I can understand that we can continue to have it go higher and take that next leg higher moving forward. But I'm speaking right now in this moment, and again, I'm not really too big on doing earnings plays because I'm sure a lot of you watching the video have done multiple earnings plays, whether it's shares or options, and earnings are pretty much 50-50. And sometimes even when a company comes out with good numbers, maybe they'll say something negative in an earnings call. So on paper you bought calls, basically quote unquote knowing that the company was going to beat, and they did, but they ended up going lower anyway, so you got screwed over. And of course we all have those stories. So at the end of the day, earnings are really 50-50. But again, overall, in my opinion, I think that the company, I don't know if I would even buy puts, to tell you the truth, because the traders just pump it up and keep it up. But in my opinion, if I was looking to buy calls to play off of, again, that next leg higher, I would actually potentially wait for next quarter's earnings, in my opinion. But I just want to show you guys here, right, because we're expecting around 6.13 billion for the quarter. So if we go back looking at Q1, you can see they posted 5.35 billion. And then we have 5.36 billion, and then we have 5.8 billion, and now we're going to have 6.13 billion, 22.64 billion. That's if the company comes in line to these estimates slated for Q4 of 2023. And as you can see, the original estimate for the year was 22.67. So now, obviously, not really a big difference, right? If the company comes in and posts 6.16, then they're going to come in line with this estimate here. However, because again, they were posting roughly 5.33 billion and then 5.8, and now we're jumping back up to 6 billion, but expecting Q1 of 2024 to drop back down to roughly 5.75 billion. I'm not exactly, personally, again, in my opinion, I don't know if I can confidently go into this earnings report saying, Oh no, they're going to beat by, several tens of millions, and they're going to be able to come in above that expected 2023 number. I really don't know if that's going to happen. Now again, because the stock has so much hype behind it and gets so much action and so much volume, I'm not necessarily saying the company's, the stock's going to sell off back to like 130, 140 or something like that. But what I'm saying is, if it doesn't move or potentially slowly sells off over the next couple of months back down into like the 160s or the high 150s, in my opinion, it would actually be completely justified. And if 2024 is gearing up the way they expect, then I can appreciate the fact that as it dips down into like those 160s, those 150s, that's when you would potentially, in my opinion, feel a little bit more confident to start piecing your way in, for the longer term and for the upcoming year rolling into 2025 as well. But I cannot deny how consistent the company is. Even on the EPS side, you can see company beating on EPS estimates 7 of the last 8 quarters, and basically same thing like on the revenue side, going all the way back to 2015, only missed one time on the EPS side for the year of 2015, and has been consistently beating those estimates now for 7 years in a row, pending tomorrow's earnings to see if they can make it 8 years in a row. But overall, I always appreciated AMD, especially since when they initially started to really ramp up and bring in that revenue, right? When a lot of people were like throwing up videos, doing the comparisons between the NVIDIA graphics cards and like the AMD graphics cards, and of course their processors as well, comparing them to Intel. And basically what people saw was obviously it's technically not the same thing, but it's like kind of in the same family. And of course, you were able to save a couple of bucks because AMD was usually their products were cheaper than, the larger name companies. But the jump in revenue really cannot be denied. And even all the way back many years ago when the stock was between like 9 and 12, and then finally started to gain momentum and jump into like the high teens and the low 20s, that whole time, obviously you guys didn't know me, but that whole time I was saying that, in my opinion, AMD is going to continue to climb, and one day we will see a $70, $80, $100 stock. Because in my opinion, when you looked at the growth in revenue, but you didn't immediately see the reaction in the stock, that's when I knew it was going to be more of a long-term explosion as opposed to, just like a short-term pops every quarter. Like, you understand what I'm saying? And even looking at something like Supermicro, SMCI, right? That was another company that I mentioned in a video several months ago. I think we were talking about ChargePoint, but I brought up SMCI real quick, and I basically showed you guys that there was like a long-term consolidation period as the stock was kind of just like trading downward into this channel. And if you looked at the numbers, it didn't make sense, right? But, again, we have some of these stocks have these delayed longer term rallies as opposed to these immediate short term explosions. And that's what you saw with something like SMCI. Again, you go back over the years, I think, you're up north of 1,000% over the last, whatever it is, like 7, 8, 10 years. But, it's that consistent revenue growth. And of course, if we're playing it for the longer term, all you really have to do is, in my opinion, just piece your way in and continue to accumulate and build a position over time. If we're talking shorter term plays, then obviously you're looking more at the technicals. And again, something like what's happening tomorrow, these earnings plays, in my opinion, they really are 50-50. And, you never know what can happen. But again, I want to look at some of these statistics here, and you can see, look at the PE just in the last several quarters here. I mean, jumping up to 400, 800, now 1,400 times earnings, right? And you can see before that, the company was pretty much realistic. Price to sales now, we're trading north of 13 times sales. That's the highest it's been going back the last several quarters. The company's trading almost 156 times cash flow now. This is what I mean. I'm not necessarily saying it shouldn't be in the crosshairs, it shouldn't be a player, it shouldn't be growing over time. That's not what I'm saying at all. But what I'm saying is we went on this massive rally and massive explosion just basically like on anticipation of more further positivity coming. And in my opinion, I'm not completely convinced, because if you recall, when rates were hiked, which of course, in my opinion, is a negative, I don't know really who can really make the argument that it's a positive, but while these rates were hiked, we continued to climb and hit these highs. And now it's like everyone just wants more on anticipation that rates are being cut. So even if rates are hiked, we're still taking stocks higher, then why the hell is everyone like sitting on their hands waiting for rates to be cut? Whether they're cut or whether they're hiked, apparently everyone wants to take the markets higher. So who the hell cares? Right here, the company's trading almost 5.25 times book. That's significantly higher than where it was trading over the last several quarters. Even back here, it was trading 3.5 times book. Now you're talking about roughly 50% higher than the highest price to book ratio going back the last 7 or 8 quarters. The enterprise value, again, basically what someone else would be willing to pay for the company. The enterprise value on something like this, believe it or not, is actually lower now after this rally. The enterprise value is lower than the current market cap. Which means that, of course, for any reason, if someone would want to step in and buy out AMD, they would probably have to offer them right around here. And you probably wouldn't get too much of a premium because the stock is already overvalued, in my opinion. The return on assets has dropped down significantly over the last several quarters. You can see it was up to almost 9%. Now it's at 1/3%, although it is up from the previous quarter. Same thing, return on equity fell down to negative, rebounded slightly. Return on invested capital went down negative, rebounded slightly. But they were doing significantly better, 12 to 18 months ago. So that's why, for a company to be hitting a little bit of a speed bump and almost like a pause year, we can say, right? Because revenue, again, total revenue expected to dip from 2022 to 2023. So this is a pause year, right? But everyone's treating it as, oh, we're taking it the next leg higher. When in reality, in my opinion, that's what should happen now moving forward in 2024. That it shouldn't be a reflection of what happened in 2023. 2023 was the pause year. And now 2024 is going to be the better year. So by middle to second half, in my opinion, of this year, 2024, that's when AMD, in my opinion, would see a justified move to 200, 210 plus per share, right? Because now we're expecting, 26, 27 billion for 2024. That's what I mean. These companies should get rewarded when they actually prove it to us, when it's worth it to give them that pump. But again, that's just my opinion. The gross margin percentage, we can see, it dipped all the way down to 31, 32% and has been climbing significantly over the last several quarters, back up to almost 40%. But you can see, again, roughly 18 months ago, we were at almost 43%. So this is what I don't know. To me, it's not adding up. We're rewarding the company for what they used to be doing. I don't know. Maybe I'm looking at it the wrong way. But again, looking at the annual revenue here, 23.6 billion, and now we have a market cap of 287.25 billion. That's what I'm saying. So the company's trading like 13, 14 times annual revenue here, and of course we're trading 1,400 times earnings. So for me to, potentially view it as a stock that's overvalued and is being rewarded in my eyes for no reason, in my mind I feel justified here. But of course, if you disagree, let me know down in the comments section. We always keep an open mind. We always like to look at all different viewpoints. The operating margin was sitting, solidly above double digits here. And now it, drops down negative to almost 2% here and slowly begins climbing over the last couple of quarters. But now we're up to 4.36% on the operating margin when we were, north of triple that roughly 18 months ago. And I understand, again, these companies, they hit these speed bumps or they hit these pauses, these little plateaus before they can gear up moving forward. I can appreciate that. But again, a lot of these things in my eyes are pointing me to a stock that should go lower first before we reward it on future revenue and future growth. EBITDA, earnings before interest, taxes, depreciation, amortization, as you see, was sitting well above 20 consistently. And then we pulled back to sub 18 down here, 16 and change. Now it's back up to almost 19%, which is very nice, but we're still not back at like that mean average of 20 plus. So that's why, again, very nice that the company is making that U-turn now over the last couple of quarters. However, this is technically a plateau pause year. Net margin percentage back up to 5%. We looked at that before, but look again, it was, roughly 150% higher 18 months ago, roughly. Inventory turnover, a very interesting metric here because this is something that people aren't speaking about. And if you look, the inventory turnover was up to 5.5 and has actually kind of been consistently decreasing, now down to 3.64 over about, went up once here. So we're looking at what, 5 of the last 6 quarters, the inventory turnover has actually dropped down. And again, the asset turnover, technically how many dollars they're really generating from the assets that they're holding. You can see the obviously the higher the better. The asset turnover, as you can see, was slowly climbing above half here of 0.55, 0.58, 0.59. Then we significantly dropped down. We lost roughly 40% of that. Now we're down to about 0.33. So that's why you could definitely make the case as to looking at a stock that should drop in the short term before jumping higher in the longer term. The asset value has been pretty much maintained. They've been holding roughly the 67 billion value, almost getting up to 68 and then slightly dipping back down here in Q3. But they're basically holding that value. Liabilities were down here to about 11.5 billion, got up to 13.25. And we can see we're still kind of holding that high 12 billion. So I guess they're kind of maintaining that average. And obviously same thing with the equity, kind of holding, between like 54.5 to like the low 55s here, 55.33 here. It looks like going back here, Q1 of 2022 was really one of their best quarters. So that is when a stock should get pumped, and I can appreciate the fact that it probably was, but again, just looking here at the more recent data, I'm just really not seeing it. The debt here is only a couple of billion. Book value per share roughly $34. Again, kind of maintaining that median average here, high 33s, low 34s, right? Was a little bit higher, though, in the past, looking back several quarters. So, again, just trying to see what can take place here. Also, interestingly enough, if we go back to Q1 of 22, you can see that revenue was a little bit higher than what they posted last quarter, posting 589, and here they posted 5.8 even. But you can see the cost of goods went from 3.36 billion up to about 3.5 billion. So now they technically made slightly less, but it cost them slightly more, right? Which, of course, both of those really are negatives. And this is why I'm saying, again, and the reason why I'm saying it should come down in the short term, because if we look at the chart, obviously you can see from the last earnings report, after markets were selling off around Halloween time going into November, we can see the stock was down here in the low 90s, and then we pulled it up to almost $185 a share. So I can appreciate the fact that everyone was pumped about the tech stock, talking about bigger and better things a couple of years down the road, and they beat earnings. However, I mean, to reward the stock with a 100% move just over the course of the last couple of quarters, that's pretty extreme, man. And that's the point I'm trying to make here. We have to bring some of these stocks, and of course some of our reactionary moves have to be brought back down to earth a little bit. Now, am I saying the company shouldn't have gone up after they beat earnings? No, of course not. But to rally at 100% off of a good quarter here, just consistently hitting new highs as these markets just consistently climb, like just for the F of it, I don't know. In my mind, it's really not jiving with me. And I know people might jump down my throat and say, oh, you don't understand the vibe of the market. We're bullish right now. Everything's hitting new highs. But again, you have to remember, if you want to have everything hit new highs while we're printing money like crazy, dealing with hyperinflation, giving handouts to people who walk into the country, the average American could barely afford to pay their rent/mortgage and go food shopping. Credit card debt at all-time highs. You know what I'm saying? If we look at all of these negatives, then the real problem is, in my opinion, that if we consistently climb the markets higher, now we're essentially forcing that quote-unquote reverse market crash, where we have to go higher significantly in the same proportion that we've been devaluing our currency. And obviously, that's the recipe for disaster. If you look at throughout history, countries like Germany and others that had these reverse market crashes. So that's why I'm saying, in my opinion, I'm not necessarily being like this negative, pessimistic, dark cloud hovering over your trading account. All I'm trying to say is actually for a country and as a market, the healthy thing that we should really be doing is actually be tanking this market and dropping down and selling off again. We should not be having these new daily highs consistently, really, off of nothing that warrants it. And that's why I think, in my opinion, if we actually start to drop this market significantly, sell it off, bring everything back down to earth, bring it all back down to reality, then as we find that bottom and begin to reverse this whole negative process, everything can slowly grow over time again, and it'll be more of an organic, realistic growth from that level, as opposed to just this overinflated, consistent pumping of markets. But in my opinion, again, that's just the way I'm looking at it, in my opinion. If you're looking at it differently, please let us know down in the comment section. That's what it's for. We'll have a nice, healthy conversation about it. But going back here, revenue minus cost of goods sold yields gross profit, and we can see that profit was sitting at 2.5 billion, dipped down to sub 2 billion for 4 quarters in a row. Now it's back up to 2.3 billion, very nice, but again, not where they were roughly, 12, 15, 18 months ago. Operating expenses consistently keep increasing, so even though, again, gross profit got back up to north of 2 billion, you can see gross profit minus operating expenses yields operating income. You can see they brought in roughly $250 million. And, coming from negative or a couple of million over the last couple of quarters, that's fantastic news. However, we were 3-4 times higher than that 15, 18 months ago. So that's why I'm saying I'm seeing, in my opinion, a lot of reasons as to why the company should just sell off a little bit before rallying and taking that next leg higher to the 200s. However, seeing what's been going on in the market, chances are there's probably a very high chance that the company is going to beat earnings, and people aren't really going to look at a lot of these metrics and statistics that you and I are looking at right now, and they're probably going to pump the stock up to the 190s and the 200s probably, within the next week or two. Of course, pending on FOMC statements on Wednesday. But again, as I said earlier, it really doesn't matter, because whether rates are hiked or dropped, markets are looking to go higher anyway, so who cares? But basically, the growth here really cannot be denied. And again, I'm not necessarily hating on AMD. I just think we have to kind of just bring it back down to earth, have it pause for a little bit, and then take that next leg higher. You can see these are some of our support lines here, basically like since the ball dropped. And even coming down here, you can say, of course, I understand if you're bullish, you don't want the stock to go lower. But yeah, even coming down here and like meeting up with this moving average and this line right here, you can see this is only like 168, 169 and change, that's not a big drop. That is not a big drop. And if it rejects here off of this top trend line here, we kind of been in like this trumpet after we hit this high going back to Thursday. And it bounced nicely off of this fib here, roughly 174.15, and it has been inching higher. However, if this is now our top resistance trend line, if we zoom in, you can see on the 1 day, that's basically right where the stocks stopped today here at the close. So now I'm very curious to see what happens here, because I just kind of drew out these trend lines, and again, we can see that the stock, technically, if that's the top, again, we're going to see an immediate drop and rejection down to 174. However, the issue now is, even though in my eyes I'd like to see that, even though it's been up for the last 3 days, and you could say, hey, we should, take a day or two breather. The problem is, again, earnings coming out tomorrow. So, you could, of course, make the case that it's going to be 180 plus tomorrow. It's going to be up a little bit, and everyone's going to be pumped and pile into the stock going into earnings. So I understand the case that it could be up tomorrow, but here, again, if we draw out our trend lines connecting the top back to last Thursday to today's top here, we can see that we could potentially expect a little bit of a rejection. And in my opinion, it would be justified down here to the 160s. Even if we pull back down here, look, we're only talking like 164, 165. And that's all I'm saying. All I'm saying is we need a slight pullback here. We need like this consolidation area. And I know it seems like a long-term play, but in my opinion, it really needs to kind of stay down and kind of step down here, and then we can, move March, April, and we could jump up for next quarter. But just my opinion, it seemed like we potentially had a little bit of a rising wedge taking place since the ball dropped, and now you can see that the stock has kind of slightly began to break down out of it. But again, we have earnings coming up, so we might not necessarily have a quote-unquote sure chance to see a consistent drop from here out of this wedge. But the overall technicals, as you can see, for the long term, we were in this long-term upward channel, right? And then we had the sell-off here throughout 22. We had the nice rally, and then after the summer, everything began selling off. We came down to this long-term fib here, roughly 93 and change. And then, again, the stock just went on a tear and is up roughly 100% from that point, hitting new highs. So all I'm really saying is, in my opinion, we really should take a pause and take a break, because the last thing I want is for the stock to just immediately get pumped again up to 200 plus, and then new people pile in, and then the correction and a potential market sell-off happens, and all of a sudden the stock's back down to like 140, 120, right? And they're stuck holding it up at 200 plus. But again, if you see anything differently than I see, Random Ad, then please let us know down in the comments section. Welcome all points of view. But switching over here to stock charts very quickly, we can see, look at the RSI on the stock. I mean, it's essentially been north of our benchmark here for the last 2 weeks. And of course, we've had times where we consistently stayed above that benchmark as well. But you can see, again, going basically since December, the company overall, the stock has been really overbought since the ball dropped. And that's why, again, a sell-off could be potentially justified. But, yeah, it almost looks like a bullish hammer, but it's not. That's why I just wanted to check the highs on that. But switching over here to the weekly as well, we can see the RSI sitting here at almost 78, significantly sitting higher than the top Bollinger Bands here. And that's all I'm saying, is that the company, in my opinion, should really take a breather before we just continue to pump it up. I mean, look at the MACD absolutely raging over the course of like the last 18 months, just flying to the moon here. It's it's so simple to say what goes up must come down, but also at the same time, like we have to be realistic here. We have to be realistic here. See, 2023 was a good year for the stock, but again, looking at the fiscal year numbers for 2023, it was technically a pause year. So that's why I'm saying, in my eyes, if we rewarded the stock like this, finishing off 23 when they technically could have remained flat or even down, then even with positivity moving into 2024, you can't justify a massive move higher, because we just had a massive move higher. So, but of course, only time will tell. But let's look at the pivot points here very quickly before I let you go. You can see that it fought to get above that top resistance level of 172.96 and then jumped up and closed basically right at that. And that's what, in my opinion, basically kept it remaining bullish here. But a pullback back here to resistance level 1 of 160.18, that, in my opinion, would be justified, and it would actually be very healthy for the stock. But of course, only time will tell. A pullback here to 119.5, I mean, that would technically bring it back to reality, but chances are that's not going to happen. And you can see this is probably why a lot of analysts have that 210 mark specifically as their updated price target, because you can see, as I mentioned earlier in the video, second level resistance sitting at 210.5 for AMD here on the weekly. So only time will tell. But again, after a big pump like this, even if the company comes in line or with a small beat on these earnings here tomorrow after the close, if not much happens, all I'm saying is, in my opinion, you can't be shocked, right? It's really not going to blindside you if the stock doesn't move. Again, we're talking, 14 times annual revenue with a PE of 1,400. And even though a lot of these metrics are recovering, they're not as good as they once were. So that's why everything was kind of pointing to a pause year. And that's not how we finished off the year for 23 and started this stock in 24. So very curious to see what happens here, but just wanted to do a little overall analysis here on AMD and just kind of point out a couple of things that I see. And listen, let us know down in the comment section if you're going to take an earnings play here for AMD. If you're pretty bullish, if you're stepping in just on some naked calls because you think no matter what the stock's going to get pumped, let us know down in the comment section. If you agree with me that the stock should just kind of pause for a little bit and you may potentially consider a short or buying some puts here, as the stock, comes back down to earth for the next couple of weeks or months. Let us know down in the comments section. And I'm going to end it there. So once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm very quick to reply. Thumbs up algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You all have a good day.